What if I told you that most small businesses scale completely backwards, focusing on revenue growth first and hoping that profit will follow? This approach leads to what we call busy broke, working harder, serving more clients, but never actually building wealth or financial security. And this is exactly where I was for the first few years of my business. I am Annette Ferguson, CEO of Annette & Co, UK-based accounting firm. I am a chartered accountant, certified profit first professional, and small business financial strategist. Today, I'm sharing with you the same profit first strategies that we have worked with many small businesses to allow them to scale sustainably while building real wealth and not just those bigger ego-driven revenue numbers. These aren't just theoretical concepts. These are proven strategies. As I said, we have used them with hundreds of business owners to help them scale from struggling startups to profitable, sustainable enterprises. The businesses that implement these strategies don't just grow bigger. They have healthier profit margins, stronger cash flow, and a financial foundation to weather any storm. By the end of this video, you will have a complete framework for scaling your business the profit first way, including 5 key strategies that ensure every pound of growth contributes to wealth, not just to workload. So if you are ready to scale smart and not just scale fast, then let's dive in. Before I share these strategies, let me tell you about 2 businesses that scaled in a completely different way with dramatically different results. Business A focused on rapid revenue growth. This was me, by the way. They took on every client, they expanded their services, they hired quickly, they celebrated hitting revenue goals. And after 3 years, they had tripled their revenue, but they were working 70 hours a week. They were constantly stressed about cash flow, and the owner was taking home less money than when they started. Business B, however, took a profit-first approach to scaling. They were selective about their clients, they focused on high-margin services, they hired strategically, and they measured success by profit, not just by revenue. After 3 years, they had doubled their revenue, but they had quadrupled their profit. The owner had a great work-life balance, and they had sustainable cash reserves. And this illustrates the scaling paradox. Bigger does not always mean better, and faster growth can actually make you poorer if you're not careful about how you scale. The profit first approach to scaling is different because it prioritizes profit margins over revenue volume. It focuses on sustainable growth rather than growth at any cost. It builds financial strength while expanding operations, and it creates systems that support profitable scaling. Traditional scaling often fails because it assumes profit will naturally flow from revenue growth. It doesn't account for the complex costs of scaling. It focuses on vanity metrics rather than wealth building metrics. And it creates cash flow problems that can kill a growing business. Today, I'm going to share with you 5 profit first scaling strategies: profitable client acquisition and retention, high margin service development and positioning, strategic team building and delegation, systems and processes for scalable operations, and financial management for sustainable growth. Each of these strategies is designed to ensure that every aspect of your scaling efforts contributes to the profitability and long-term success. Let's start with the foundation. The first profit first scaling strategy is profitable client acquisition and retention. This means being strategic about what clients you pursue and how you keep the best ones. Start by creating a client profitability metric that evaluates clients based on 2 dimensions: revenue contribution and profit margin. This creates 4 categories: high revenue, high margin, your ideal client; high revenue, low margin, revenue traps; low revenue, high margin, growth opportunities; and low revenue, low margin, clients to avoid or fire if you have them. Your ideal clients typically have these characteristics. They value quality over price. They pay promptly and without hassle. They require less hand-holding and management. They refer other quality clients. They're willing to pay premium prices for a premium service. This is not about ripping people off. You are still providing a premium service, and people are paying premium prices for that. Applying the 80-20 rule to client management, 80% of your profit often comes from 20% of your clients. Focus on scaling efforts that attract more clients like your top 20%, and consider whether the bottom 20% are worth keeping. Here's a real life example of a consultancy firm. They analyzed their client base and they discovered that their 5 largest clients generated 60% of their revenue, but only 30% of profit due to scope creep revisions. And their 10 smallest clients generated 15% of the revenue, but 40% profit. Because with those clients, they had really clear boundaries and premium pricing. This insight led them to restructure their services and their pricing to attract more profitable, smaller clients while setting better boundaries with those larger clients. Profitable acquisition strategies include referral programs that you can award your best clients for bringing on similar clients, content marketing that attracts your ideal client profile, premium positioning that filters out price-sensitive prospects, and strategic partnerships with complementary businesses. Focus on retaining clients through exceptional service delivery that exceeds expectations, regular communication and relationship building, proactive problem solving and value addition, loyalty programs, or incentives for longer term clients. And the thing is that sometimes you do need to fire unprofitable clients. Clients who are constantly demanding discounts, those who don't respect boundaries or scope, clients who pay late or cause you cash flow problems, those who require disproportionate time and energy. To implement this strategy, you need to analyze your current client base for profitability, identify characteristics of your most profitable clients, develop marketing strategies to attract similar clients in, and create systems to maintain profitable client relationships. The second strategy is developing and positioning high margin services that allow you to scale revenue without proportionally scaling costs or complexity within the business. First, understand your service margins. Many people don't know this, but you really do need to know your actual margins. You need to know your direct costs, time, materials, subcontractors, indirect costs, overhead, admin, sales costs, and get a true profit margin after all costs. Time investment required for delivery needs to be factored in here. Think of your services as a profitability pyramid. Foundation services can be lower margin, higher volume, attract clients. Then you have your core services, which have good margins, steady demand, and they maintain your revenue. And then you have your premium services at the top, which are your high margin, lower volume, maximum profit. High margin services typically have the following characteristics. They solve expensive problems for clients. They require specialized expertise or knowledge. They're difficult for clients to do themselves. They provide measurable, valuable outcomes, and they can be systemized and repeated by yourselves. A business coach discovered that their one-to-one coaching generated £100 an hour, but their group mastermind generated £300 an hour of their time. The mastermind requires the same expertise, but can serve multiple clients simultaneously. They shifted their focus from developing more group programs and premium offerings that doubled their effective hourly rate while serving more clients. Positioning services based on value rather than time is really important. To do that, you need to focus on outcomes and results, not the hours worked. Communicate the cost of not solving the problem. Demonstrate ROI, return on investment, and measurable benefits, and position yourself as an investment, not an expense. I have a separate video on this. I will link to that. And you want to develop premium services by identifying your clients' most expensive problems, creating solutions that deliver exceptional value, packaging your expertise into repeatable systems, testing and refining based on client feedback. And that will then lead you to scale high margin services through leverage. So group programs that serve multiple clients, digital products that can be sold separately, licensing or franchising a methodology, or training others how to deliver your systems for a fee. And we need to make sure that we then protect those margins as we scale. So resisting the temptation to compete on price, maintaining clear scope and boundaries, and having systems to do that. Regular reviews and adjustments of your pricing, and focusing on value communication, not cost justification. And the third strategy is strategic team building and delegation that increase your capacity without destroying the profit margins. The challenge with scaling through team building is that many businesses hire too quickly, too soon, the wrong people, or fail to delegate effectively, which reduces profitability instead of increasing it. Using the profit first hiring framework, only hire when the role will generate more profit than it costs. I always say that employees need to be bottom line positive. There needs to be a way for your hire to impact profitability positively in the business. Hire for revenue generating or cost saving activities first, and then ensure that you have a system in place before hiring so that these people can be up and running and effective as soon as possible. And remember as well, when you're working out if you can afford a new hire, you need to calculate the true cost of employment, not just their salary. As I said, prioritize revenue generating roles. Those can be sales and business development positions, client delivery roles that allow you to serve more clients, specialized expertise that commands a premium price, or roles that directly contribute to client satisfaction and retention. And calculating the true cost of an employee, it's not just the base salary and benefits. You have recruitment and training costs, management time and overhead, equipment, software, workspace costs. These all add up, and the total is typically 1.3 to 1.5 times base salary as a basic calculation. And using strategic delegation to maximize your impact, making sure that you delegate tasks that others can do 80% as well as you. No one needs to do them as well as you do. 80% will work. Keep track of tasks that require your unique expertise, however, or generate the highest value. And create systems and processes before delegating. Proper training and support is really important to get your employees and your team profit producing. A consulting business owner was spending 20 hours a week on admin tasks that could be done by someone earning £15 an hour. By hiring a part-time assistant for £300 a week, they freed up 20 hours to focus on client work worth £100 an hour. And they were able to generate an additional £1,700 a week in revenue. Following this delegation hierarchy, admin and routine tasks first, specialized tasks that can be systemized, client delivery that doesn't require your personal involvement, and business development and relationship building only with proper training. Build systems that can support the team's scaling, which includes standard operating procedures, training programs for new members of staff, quality control and performance management is really important, and communication and collaboration tools as well. And you can consider performance-based compensation if that's appropriate, a base salary plus a performance bonus to incentivize. You can have commission structures for sales roles, for example. You can do profit sharing for key team members, although I wouldn't recommend that as soon as they come on board. And you can have equity participation for long-term contributors. The fourth strategy in building systems and processes that allow your business to scale without requiring your constant involvement in every decision and task. The principle is simple. If your business cannot run without you, you cannot scale profitably. Every process that depends on your personal involvement creates a bottleneck that limits growth. Again, I have been there. Focus on 4 types of systems: marketing and lead gen, sales and client onboarding, service delivery and fulfillment, whatever that looks like for your business, financial management and reporting systems. Systemize your marketing and lead gen. That includes things like creating content and publishing schedules, lead capture and nurturing sequences, referral programs and processes, social media and online presence management. Systemizing your sales and client onboarding can include standardized sales processes and scripts, proposals and contract templates, client onboarding checklists and procedures, payments and billing systems. Systemizing service delivery can include a step-by-step delivery process, quality control checks, client communication templates, project management and tracking systems. And systemizing financial management involves automating invoicing and payment collections, expense tracking and approval processes, regular financial reporting and analysis, and cash flow forecasting and management. A digital marketing agency systemized their entire client onboarding process, reducing the time from contract sign to campaign launch from 3 weeks to 5 days. This allowed them to serve 40% more clients with the same team while improving the client satisfaction as well. Make sure, of course, that you document your systems effectively, writing up procedures for key processes, video tutorials for complex tasks, develop checklists and templates, and regularly update and improve documentation. What we do is we just screen record when we are going through things that we need to train people on, and it can be a really easy way to get this documentation up and running quickly. Use technology to support scaling. Customer relationship management systems, project management and collaboration tools, automated marketing communication platforms, and financial management and reporting software. And of course, making sure that you adopt a continuous improvement mindset with this. Regular reviewing and optimizing your processes. Gather feedback from team and clients, measure and track performance indicators, and making incremental improvements consistently. And the 5th and most critical strategy is implementing financial management practices that ensure your scaling efforts create sustainable, profitable growth. The profit first scaling formula is revenue minus profit equals expenses, not revenue minus expenses equals profit. The profit first formula ensures that profit is protected and prioritized as you scale. Implementing bank accounts for the scaling business, a profit account, owner's pay account, tax account, operating expenses account, a VAT account if you're VAT registered, and potentially a growth investment account as a separate allocation for scaling. Managing your cash flow during scaling. Aim to maintain a 3 to 6 months worth of operating expenses in reserves, in your vault, in your emergency fund, whatever you call it. Plan for cash flow impacts of growth investment. Monitor accounts receivable and payment terms really carefully and avoid overextending on growth investments. You need to use this framework for those. Only invest in growth that has a clear ROI projection. Ensure you can afford the investment without jeopardizing operations. Set specific metrics and timelines for measuring success, and have a plan for scaling back if investments don't perform. A consultancy business wanted to hire 2 new consultants to handle growth. Instead of hiring both immediately, they hired one, measured the impact on revenue and profit for 3 months, and then hired the second one only after confirming the first hire was generating a positive ROI. Approach allowed them to scale safely while protecting their financial position, even though the temptation is to get in both at once and scale faster. And make sure you keep tracking metrics during scaling. Gross profit margin by service line, customer acquisition cost versus lifetime value, monthly recurring revenue and growth rates, cash conversion cycle, and working capital needs. Build a scaling safety net. Maintain higher cash reserves as you go into a growth phase, diversifying revenue streams potentially to reduce risk, keeping fixed costs as low as you can, and having a contingency plan for different scenarios. As we scale a business, things don't always go to plan. Make sure you're not going to run out of cash in the process. And to protect profit margins during scaling, resist the temptation to cut prices for volume. Maintain quality standards that justify a premium price tag. Regularly review and adjust pricing as you add more and more value, and focus on efficiency improvements, not just cost cutting. Now let me show you how to integrate all 5 strategies into a comprehensive profit first scaling system that ensures sustainable profit growth. Start with a scaling assessment. Analyze your current client base for profitability. Evaluate your services for margin and scalable potential. Review your team and systems for scaling readiness, and assess your financial position and cash flow capacity. You can implement changes in 90-day sprints. So sprint 1, client optimization and service positioning. Sprint 2 being team building and systems development. Sprint 3 being financial management and growth investment. And then sprint 4, review, adjust, and plan the next phase. Creating a scaling metrics dashboard can really help you track things: revenue growth rate, profit margin trends, client acquisition costs, lifetime value, team productivity and utilization rates, cash flow, and other financial health indicators. And using a decision framework for scaling choices. Will this increase our profit margins or just our revenue? Does this align with our ideal client profile? Can we systemize and delegate this effectively? Do we have the financial resources to support the growth? But please do avoid some common scaling mistakes: growing way too fast without proper systems, hiring before you have sustainable demand, cutting prices to win volume businesses, and neglecting existing clients while you pursue new ones. Instead, follow a sustainable growth model, optimizing your current operations before expanding, build systems and processes that support growth, invest in team and infrastructure strategically, maintain financial discipline throughout the process. And you can look for these scaling indicators: profit margins maintained or improved during the growth, cash flow remaining positive and predictable, team productivity and satisfaction increasing, client satisfaction and retention improving. Keeping a long-term vision in mind, you want to build a business that can operate without your constant involvement. We do that by creating multiple revenue streams and growth opportunities. We can develop valuable business assets and intellectual property, and even position eventually for an exit, because at some point we all exit our business. Let me share with you 3 real-world examples of businesses that have successfully scaled using these strategies. Marketing agency implemented all 5 strategies over 18 months. They fired their 3 least profitable clients and focused on attracting premium clients. They developed high margin strategy consulting services alongside their execution work. They hired strategically, adding a senior strategist who could command premium pricings. They systemized their entire client delivery process. They maintained a strict financial discipline, and they made sure they stuck to profit first principles. The results were that the revenue increased by 60%, but their profit increased by 180%. The owner reduced their working hours from 60 hours a week to a much more manageable 40 hours a week, and they took home significantly more money. The second is a professional services firm which transformed their scaling approach. They analyzed their service portfolio and they eliminated their low margin offerings. They developed group programs and some digital products to leverage their experience. They built a team of specialists rather than generalists. They created comprehensive systems for everything from lead generation to service delivery. They implemented a robust financial management and forecasting system. They doubled their revenue while tripling their profit margins, and they built a business that could operate effectively without the business owner's daily involvement. And the third is a consulting business using a profit-first scaling approach to transform their model. They shifted from hourly billing to value-based pricing for their premium clients. They developed a signature methodology that could be licensed to other consultants. They built a small but highly skilled team focusing on high-value activities. They systemized their entire business development and delivery process, and they maintained strong financial discipline and cash reserves throughout their growth. They achieved a 300% revenue growth over 2 years while maintaining 40% profit margins and building sustainable cash reserves. The thing is, there are common factors in all the successful scaling stories that we have. They focus on profit margin, not just revenue growth. They strategically approach client acquisition and retention. There is investment in systems and processes before rapid expansion. And they have disciplined financial management throughout the scaling process. So let's recap the 5 profit-first strategies for scaling your small business. Profitable client acquisition and retention focuses on quality over quantity. High margin service development and positioning maximizes your expertise value. Strategic team building and delegation increases capacity without destroying margins. Systems and processes that enable a scalable operation without your consistent involvement. And financial management that ensures sustainable, profitable growth. The key principle is that sustainable scaling requires discipline, strategy, and a focus on profit, not just revenue. It's better to grow slowly and profitably than quickly and unprofitably. So here is your 30-day action plan. Week 1, analyze your current client base and service portfolio for profitability. Week 2, identify your highest margin opportunities and ideal client characteristics. Week 3, assess your systems, team, and financial management for scaling readiness. Week 4, create a 90-day plan for implementing the most important improvements. Do a scaling assessment. Are you ready to scale profitably? Do you have the systems and processes in place? Is your financial management robust enough to support your growth? Do you have the right team and client base? If you want help implementing these profit-first scaling strategies in your business, that is exactly what we do here at Annette & Co. We help UK business owners scale sustainably using profit-first principles, ensuring that growth creates wealth and not just bigger problems. You can book a free financial health check where we'll assess your scaling readiness and create a profit-first growth plan for your business. You can do that by clicking on the link in the description to this video. I also have some free resources to help and support you implement the strategies that we have talked about. Again, you will find the link in the description. Make sure, of course, that you do subscribe to the channel. Turn on the bell so you know next time a video is uploaded. And we also have our Profit First UK community, which is completely free to join on Facebook. Again, the link will be in the description. There you can connect with other like-minded business owners who are also scaling using Profit First. Now, before you go, I would love to hear from you in the comments. What is your biggest challenge when it comes to scaling your business? Which of these 5 strategies do you think will have the biggest impact on your business? Let me know. I would love to help and support you. Here's my promise to you though. If you implement these 5 profit first scaling strategies consistently, you will build a business that grows sustainably, generates real wealth, and gives you the freedom and security that you probably were looking for when you started your business. Remember, the goal isn't just a bigger business. We are here to build better businesses, to scale smart, not fast, to focus on profit, not just revenue, to build systems, not just sales. And always remember that sustainable growth is much more valuable than rapid growth. Thank you so much for tuning in today. I know your time is incredibly precious, and I really do appreciate you spending some of that with me here today. And remember, the businesses that scale with a profit first strategy don't grow bigger. They grow better, they create a lasting wealth, and there's genuine business success. Take care, everyone. I will see you soon.